This is our final class on the incomplete question from 2013. It was the E. Kelly question. What I'm going to do first here is I'm going to quickly go back over the three notes we looked at yesterday. I do see the value in having pre-recorded videos because, with questions to come down the line, I feel like it's handy for you to be able to go back and re-watch those videos. So you can't re-watch the three notes we did yesterday, so I'm going to quickly go over them so that now you can. Very quickly, the loan interest one now I've done out in a T account. Maybe that might make it a little more straightforward. So what happened with the loan is we took out a €72,000 loan. Interest is at 10%, so obviously 72,000 by 10%, but because we took it out for 6 months for this year, and when we're looking at the P&L, we only care about how much expenses for this year. The 10% is for a full year, it's 10% per annum, but because we only have 6 months, I want to calculate 6 months here. So my loan interest expense for the year is 3,600, so I can show that here on the credit side. Now what happened during the year is that from our bank payments, which would be obviously the credit side of our bank account, we have interest, 2,400. So if it's on the credit side of the bank account because it's bank payments, it's on the debit side here. This is the interest we have for the year, this is the interest we paid, and therefore the remaining amount is a current liability. It's the interest we still owe. That's the first one. The second one we looked at was to do with the loan repayment. Now just to show this in a T account, I'm going to stick with the T account from now on. To show this one here, we look at the loan interest, or the loan, sorry, is 72,000. It's to be repaid over 12 equal installments over 6 years. So obviously over 12 installments for 6 years means that we're paying 2 installments a year. So if the loan is for 6 years, what we're doing is we're trying to find out, I've showed it here, we're trying to find out how much we owe. And obviously we owe 72,000. Now obviously this is money that we owe. Most of this is owed in the long term. However, for the first year, anything that we owe in the first year, which would be the following year, it'll be from the 1st of January and the 1st of July of 2013, all of that is a short-term liability because it's owed next year. So everything we owe within the next year is a short-term liability. So this 12,000 here becomes a current liability because basically it's the first 2 payments. The loan is for 6 years. Whatever we owe in year 1 will be treated as a short-term liability, and whatever we owe in the remaining periods is a long-term liability. So when I've done this here is I've shown the loan coming in as my 72,000. We're looking at how much we have to repay back. 12,000 is short-term, 60,000 is long-term. Again, this is just divided by the 12 installments multiplied by the 2 in year 1 being a short-term liability and the remaining being long-term. Both of those are liabilities. It's just important to distinguish between the fact that anything you owe within 1 year is a short term, everything you owe after 1 year is long term. The final one we did yesterday was rent. Again, this to the side now, this is just a question again repeated. So for the rent one, we can see that our rent for 1 year was 22,800. It's on a bank payment, therefore it becomes a debit side here. So that's the amount of rent that we have. Now we can see here at the bottom that rent was for a building and that half of the building was for private residence. So without even looking at how much of the building we use this year or next year, we know straight away that half of it was for private residence. So let's start with that. Half of what we paid goes to drawings, and that'll go into our drawings account. Now for the remaining amount, which would be the other half, obviously the other 11,400, we have to look at the date. The figure for rent basically came about on the 1st of August. So that even though we paid rent for 1 year, only 5 months apply to this year, 8th, 9th, 10th, 11th, and 12 months, and the remaining 7 months obviously will be for 2013, therefore next year, that we prepaid. So I show that by getting the 5 months and having here as a rent expense for the year, and the remaining 7 months being a prepaid expense, therefore a current asset. And that's how I show my rent. Those notes will be handy to look back on in time to come. They're probably, some of the more difficult ones. Just to finish off, there's a few notes left. My wages here, you can see here that at the very top we have wages due, but if you look through the rest of the question, wages does not appear anywhere. Now this needs to be dealt with somewhere. So just like sundry expenses or anything like that, I'm going to find something here to throw this wages in, and I can see there's general expenses. So I'm going to call this wages and general expenses. This is money out of my bank, this is money out of my cash, therefore it's the credit side of my cash, same principle as bank, therefore my general expenses here is debit side. My wages at the beginning of the year is wages due, liability, and therefore the difference between both sides is my P&L. It's my expense. So I've thrown the two in together. Because this is a cash payment or bank payment, both of these figures here, for example, this general expenses, as you can see up here, was a credit side figure in my cash account because it's money out of cash, and therefore its double entry will be debit side here in, where am I gone? It'll be debit side here in my wages. This is a liability at the beginning of the year, and therefore the difference is my expense, P&L, for wages and general expenses. Now, light and heat is our last tricky one, I suppose, because we're dealing with drawings again. For my light and heat, I have nothing at the beginning of the year. Usually there is. I have light and heat here that I again paid out of my bank, credit side of my bank, debit side here, 4,600. Okay. After that, I am going to have to go down. I have a little story here about what's going on with, how much of it was private or not. But it says here that 25% of the light and heat used this year is going to the private section. So 25 of the light and heat used. This is just the light and heat that I paid. So I can't multiply this by 25%. I need to find out how much light and heat I actually used. And to do that, I need to factor in the information at the bottom. So before I look at these two, ignore these for a second. Before I look at them, all we have is our bank payment that we go in here, that we throw here, and we have our two carried down figures. So stock of heating oil is going to be an asset down here. So its balance carried down is up there. The other one is electricity due is a liability, obviously for next year. So it is therefore carried down here. Now I can see that I paid this, I used this much electricity, and I have this much stock of heating oil that I didn't use. So when I'm trying to find my light and heat used, I put in those figures, and then I'm left to find what's the difference. So 4,600, 640, and 500. If I was to balance both sides, my balance in both sides would be 4740. Or my balance here. Let's pretend drawings didn't exist. There's no drawings here. There's just bank, balance carried down, balance carried down. What would you do? You'd put in the difference here as P&L, and it would be 4740. So that would be the way we do it. But out of this 4740, the figure that you'd put in here to balance both sides, 25% is going to go towards drawings. So I get the difference here. The amount that I should put in is P&L, which is 4740, but 25% is going to drawings and 75% to P&L. And that's all I've done there. So again, because it said light and heat used, I need to find out everything I can to do with light and heat to find out how much I've actually used for the year, which is usually my P&L figure. I have my bank, put in my two balance carried downs. This is the balance on both sides. So the difference here should be 4740, but I'm going to get 25% of it to drawings and 75% to P&L. Again, these are my two balance brought down figures at the bottom. Buildings. Okay, so buildings, if we look up at the very top, we have premises of 174,000. That goes in here. What did we do? Well, we bought a warehouse for 60 grand. So obviously, let's increase our buildings by 60 grand. Balance on both sides is 234,000. And therefore, my balance brought down is 234,000. By the way, actually, just as I suppose referring to this question, I went back over just to put this stuff in Excel, and I actually had made an error, just a calculation error. I had added this up wrong. So you can pause this here and correct from the notes copy. I had this figure, I think, in wrong. I've just changed this over again to a T account. Just put the credit purchases from this credit side up to this debit side, and obviously same with the cash purchases. Take away the drawings, and then the difference is P&L. So I had that figure in wrong. And just to clear it up, I also turned this into a T account. Credit sales that I got from my debtors account up here. So this is my credit sales, 34,600, and this is my cash sales, my cash account. Let's take both of those figures, let's put them on the credit side, difference is my P&L. So I've just turned those into T accounts as well. Okay, the notes, I have only one left, I think. Yeah, my last note is drawings. I'm trying to think, have I done yeah, I've done everything else. So my last note is drawings. All I've done here is just taken all of the figures that I've called drawings in my credit side. This is one here, my 11,000 or 1,185. The second one is rent up here, and the other two I can take from my cash and my purchases. This is my purchases one. Remember, it's to do with stock that we took out, and my cash one up here is this guy, 3120. So all of those figures added together, all of those figures added together, and you throw them up here, adds up to just short of 20k. And obviously that's my balance carried down, and therefore brought down here as my balance brought down. It's to go to finance by. Now, I'm just going to show the final trading accounts. I'll focus on the P&L first, because we've seen this structure before. This is this is how our accounts will look like. You start off with your sales figure. Well, where did I get that? Let's go up to my sales. My total sales here is 205,770. While we're up here, let's go to total purchases. My total purchases was 78,140. So let's take those two figures, and straight away we can put those in. Total purchases 78,140, total sales 205,770. And obviously this follows the normal format: sales less cost of sales, opening stock, purchases. Add those together, take away closing stock, give your cost of sales, take that away from your sales, and you have gross profit. This format is very familiar at this stage. Okay. My opening stock, where am I going to get my opening stock? I can see up here at the top of the question, 14,300. Where do I get my closing stock? I can see here at the bottom of the question, my closing stock is 15,000. Why is it 15? This is a something I need to highlight. Closing stock is not including heating oil. Why? Because this first section here is the trading part. I have my trading profit and loss. This is to do with trading. So when I'm looking at trading, I'm basically looking at all of the stuff we buy as our purchases, and then we look at it, okay, this is how much we paid to buy it, this is how much we made when we sell it. Are we making a profit or not? We're looking at how much money we're making from actually trading. So we're only looking at, what we're selling. The heating oil, it's got nothing to do with my trading. That's just an expense I pay just so I can heat my building. So it hasn't got to do, again, if I was Adidas and I'm, buying in different materials and then I'm producing jumpers and selling those jumpers, and producing tracksuits, and producing runners, and producing all these things, all of the costs I pay here are going to add up, and then I have my, sorry, just cancelling a phone call, and then all of those costs add up, and then I have my total sales that I make from it. My gross profit is 128,330. My less expenses here are just basically taken from the question, from all the notes we've done so far. So general expenses, light and heat, interest, insurance, and rent. Where did I get all those figures? So I'm just going to go up here. So I have my light and heat. I have my wages here. Again, that's an expense. I have my rent up here. That's an expense. I have my loan interest here. That's an expense. I have my insurance. That's an expense. They're the one that's obviously EXP. I think that's the last of them. I'm just going back through my notes. Anything I wrote EXP next to, I'm just throwing in here as an expense. So that's the lot of them. The only other one that I have in there, I'll just show you here in a second, is when I go through this question, I'm going to go through all the things that I paid for. And I can see here, out of everything here, most of them have been adjusted. You don't include lodgements, you don't include, purchases are already dealt with, general expenses are dealt with. Equipment is to do with fixed assets, you're not going to include that. Fixed assets are not for expenses. They're fixed assets in a balance sheet. This is to do with a balance sheet again. Light and heat we've dealt with. Insurance we've dealt with. Insurance we've dealt with. Standing order for charitable organisation we have not dealt with. Vehicle is a fixed asset. Rent we have dealt with. So out of all our payments, the one that we haven't yet changed and the one that needs to be included as we see it, the figure that's given is 2,500. So I'm putting that 2,500 in here for charity. My charitable organisation is 2,500. Add up all my expenses, gets me to just 38,385. I take that away from my gross profit, and I'm left with a net profit at the end of 89,945. That's my net profit. So how do I do my balance sheet? Well, quite simply, my intangible assets is the first thing. We haven't seen this before. I don't believe we've seen it before this is our first time looking at goodwill. So goodwill again is an intangible fixed asset. It's something that we cannot see, so it's intangible, but it's also a fixed asset. The goodwill is here that we took from note number 1. So we're putting that in. After that, we have our other fixed assets, our normal ones. So buildings, we did a note on buildings to find our figure for the balance sheet. Our vehicles, well, we had no vehicles at the start. There's nothing here, by the way, at all about depreciation. We bought vehicles at 32, so let's throw that in. Equipment, we bought equipment of 30, so let's put that in. As I said, there is no depreciation, so these are just all going to be automatically in my net book value figures. Add all this up, and then we're going to add this along with these 3 figures here to give me my total fixed assets. There is no investments, so let's move on to current assets next. From the question, we're given most of these here. Stock, so my closing stock was 15,000. I also had 500 stock for heating oil there. If you want, you can include them together as 15,500. Debtors is given as 16,600, bottom of the question. Let's plug that in there. Bank is 10,100. Well, where am I getting bank from? Let's go up to my bank note. All I'm going to do now is I'm going to go through my notes. Everything that has a current asset thing here, obviously just write into current asset. So I'm going to have cash account. I'm going to have bank account. Let's put those figures in. I've already put that in because that was given at the bottom of the question up here. But you know your goal here is to go back through the question. Anything that is current asset, insurance 750. That obviously going to go into my current assets. Rent 6650. Light and heat 500. Again, that's my stock at the end. That's a fixed asset, so we're not looking at that now. And that's it. So let's include all of those. I have my insurance, my rent, my cash, my bank. They're all the figures that we found. Total current assets is 50,150. Let's look at liabilities. We're nearly there. So liabilities given in the question is 14,300 for creditors. I have my electricity due given again as 640. My interest and loan installments. So where am I getting these figures from? Let's go up to those notes. Notes 9 and 10. If I go through all my notes, I can see here that there's 2 balance brought downs. My loan interest is 1,200, and the short term, what I owe from my loan was 12,000. Again, both of these are CL next to them. Where you see CL, that's our current liability. That's why it's important to label things. It's just so much quicker to go through it at the end. That adds up to just 28,140. It's my total creditors I owe in the short term. It's my total current assets I own in the short term. Take that away, I get 22,010. That is my excess current assets over creditors, so it's a positive figure. I add it to my total fixed assets, and I have my total net assets, 338,680. Let's look at the bottom of the question. So finance by, that is my heading. Creditors, which is long-term creditors we owe, it's going to be loan or debentures or mortgage or something like that. We have loan in this question, and it is 60,000. Where am I getting that from? Let's go to our loan repayment. We saw that 60,000 was owed in the long term, so that becomes a finance by figure. That's where I'm getting that from. And the rest of it is quite familiar. Capital and reserves is my next heading. You know, these aren't the stuff I owe in the long term. They're things that I have, my equity more or less. My capital is what was invested in the business. Up here I can see my capital is 205,000. So it's not going to be my worth of the business. It's just the fact that this all this money was invested in the business. So the 205,000 is the figure I take at the top. Dividends were included as well. Where do I see that? Well, I've lodged money into the business. I've lodged dividends in. So this is obviously E. Kelly's made dividends from a company, some other company, and he's decided to put that money in, 3,600 during the year. So that's going to go in as well because that's capital introduced. We're going to call that capital introduced, and I'll put dividends in brackets, just to know that because we see that that's money that was lodged during the year, it's dividends that he personally would have made from another business. And I'm going to add my net profit. Where do I get that? Well, up here I have my net profit that I got from the previous part, 89,945. I'm going to add those up. I'm going to take away my drawings, the very last figure that I need to find. Drawings again, we got here finance by. And so if I take all that into account, drawings are going to be negative. Add those three up, I get 278,680. 60,000 plus 278,680, and I balance both sides. That's the E. Kelly question. That's higher level. It's our first experience at finishing a full incomplete question. Make sure we have all that written down into our notes copy. I'm going to make that available on Google Classroom. And after that, most of the questions will be quite similar. Some of this stuff will change. I'll talk to you about it when we do it. So your homework as of now is just to make sure all of this is written into your notes. And obviously, you made it this far, so you've watched the video, which is most of your work. Thanks for listening.